when I look at a top like the one that we probably had in October and say, look, it's the same thing as always, right? It's just that people thought it would go on longer because, certain altcoins hadn't pumped yet. But at the end of the day, what if the 4-year cycle is intact? And what if we do get a bear market rally at some point back to 100K and it draws people back in, only to eventually go lower into the summer of 2026? I think that's very well likely what will happen. And the reason I say it is because while from a timing perspective, this bear market could not start, it couldn't be any more the same as all the other prior cycles. Q4 of every post-halving year. How could we pretend like it can't happen again just because it didn't go as high as people want, or just because certain altcoins didn't go up as much as people want?
Bitcoin has always followed patterns, and those patterns have made believers out of skeptics time and time again. Every 4 years, the cycle repeats. A halving happens, prices climb, euphoria takes over, and then everything crashes back down to earth. It has been predictable, almost comforting in its reliability. But now, something feels off. The timing lines up perfectly with history, yet the emotions and the signs that usually scream top are nowhere to be found. No mass hysteria, no new retail investors flooding in, no social media exploding with Bitcoin fever. Just silence and confusion. This disconnect is creating tension across the market. Bulls are waiting for the final surge that never came, while bears are convinced the party already ended and no one realized it. The truth is probably somewhere in between, buried under data that tells two different stories at once. Bitcoin topped out in the fourth quarter of 2025, right on schedule with every post-halving year before it. Yet this time, the celebration was muted, the gains were modest, and altcoins never got their moment to shine. Crypto analyst Benjamin Cowen says we might be living through a completely different kind of bear market, one that does not play by the old rules. He points to 2019 as the blueprint, a year when Bitcoin topped without fireworks and bled slowly while everyone waited for something that never came. Cowen believes this bear market will not feel like the others because it started from apathy, not greed, and that changes everything about what comes next. Let's watch clips from Benjamin Cowen's latest market analysis. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
I do want to talk a little bit about the current predicament that we find ourselves in. And essentially, the predicament is that we know from history, whether you like it or not, that Bitcoin tends to top out in the fourth quarter of the post-halving year. Q4 of 2013, Q4 of 2017, Q4 of 2021, and potentially Q4 of 2025. Now, there's reasons that both the bulls and the bears can point to say why they think they're going to be right. We did a video on this a few days ago called Bitcoin, maybe more than a few days ago, but it was called Bitcoin, the Bulls versus the Bears, or something like that. But the general idea is that the bears think that, look, we had our bull market, right? We had the bull market. If you look at the ROI from the low and you factor in diminishing returns, what more could we have asked for, right? Like, this is exactly what you would have expected. A cycle, Bitcoin went up, how much from the lows? Like 8x from the lows. And it lasted the same amount of time as the last two bull markets. So we can't ignore that just because we think, oh, there has to be something else. But while it's very much the same, almost perfectly, right? Like, if any one of you a few years ago were told to draw a line for this bull market, factoring in diminishing returns, would you not have drawn something similar to what exactly happened, right? So when you think about it, it played out like it always does. But in other ways, it's so different. Because when you look at things like social interest, this orange line, It's nowhere close to what it was in 2021 or 2017. Nowhere close. Social interest is nowhere close to what it was back then. And in fact, if you were to just simply look at a metric like, I don't know, what's a good one? YouTube subscribers to various crypto YouTube channels, what you'll notice is that what we're seeing right now is nothing like 2021. Nothing like it, right? It's completely different in the sense of like, there's no retail interest here, at least no new retail interest. So one of the reasons you get like brutal bear markets is because you have a lot of retail come in, they buy the top, and then they end up acting as selling pressure for the next year. That's what happens. But in this case, we didn't really have that. And if you look at some of the indicators, like the on-chain risk, it doesn't really suggest that we ever truly hit euphoria. What I've said, and I will continue to say, that this entire move by Bitcoin, the entire bull market that we have had for the last 3 years, this entire move is the most similar to this one right here in 2019. So when I look at a top like the one that we probably had in October and say, look, it's the same thing as always, right? It's just that people thought it would go on longer because, certain altcoins hadn't pumped yet. But at the end of the day, what if the 4-year cycle is intact? And what if we do get a bear market rally at some point back to 100K and it draws people back in, only to eventually go lower into the summer of 2026? I think that's very well likely what will happen. And the reason I say it is because while from a timing perspective, this bear market could not start, it couldn't be any more the same as all the other prior cycles. Q4 of every post-halving year. How could we pretend like it can't happen again just because it didn't go as high as people want or just because certain altcoins didn't go up as much as people want? In that sense, it makes sense to say we're in a bear market, right? Like it makes sense. And in fact, like so many of the different indicators breaking below the 50-week moving average, right? Breaking below the support from the prior year. And that's something we talked about a lot is how Bitcoin was sort of stair-stepping up, but now it's completely broken that support and it's come all the way down here. I could envision a scenario where Bitcoin kind of drops back down and then gets this big counter trend rally back up and then potentially drops. And so what I'm sort of thinking, what I'm kind of speculating about right now is if you don't top on euphoria, then what does the bear market look like? And do we have other examples? And yes, one is 2019. And one of the reasons why we compare this to 2019 is because back in 2019, Bitcoin actually topped out about 2 months before the balance sheet of the Fed started to go up. You can see that right here, right? Like Bitcoin topped, QT continued, and then the balance sheet started to go up. Bitcoin continued to go down at first. So what if it's the same thing where Bitcoin tops a few months before the balance sheet starts to go up, and then maybe it goes up, but Bitcoin kind of still bleeds until there's a really big reason for the money printers to come back on. The issue that crypto has right now is that there's not really a great reason for interest rates to drop to a lot and for QE to come back on, because while Bitcoin is stuck in traffic on Struggle Street, the S&P 500 is basically printing new highs, right? So that's the hard part. And what ended up happening with Bitcoin last cycle, Bitcoin, if you overlay Bitcoin onto this chart, Bitcoin started to go down, but it wasn't until the S&P crashed that led to this major shift in monetary policy that then led Bitcoin to massively new highs. So the dilemma we find ourselves in is that there's always a bull market somewhere, and right now it seems to be in metals and stocks. You could argue the only way that Bitcoin's going to really break out and go to new highs is for much looser monetary policy. But the only way you get to much looser monetary policy in practice is if the S&P were to start crashing. Now, something different might happen. Powell, the chair of the Federal Reserve, is likely going to be replaced in the summer of 2026, there does exist a scenario where they aggressively cut and do things they shouldn't do just because they want to run things hot, which would probably be a mistake long term, but in the short term, it might actually be a good thing for the markets.
Benjamin Cowen keeps going back to one comparison, 2019. That year, Bitcoin topped out at around $13,800, and most people did not even realize it was the peak. There was no alt season. Social interest stayed low. Then Bitcoin slowly bled down while the Federal Reserve ended quantitative tightening and started cutting rates. Cowen sees the exact same setup now. Bitcoin peaked in late 2025, QT just ended, and the Fed has started easing, yet the price keeps falling. What makes this even stranger is that Bitcoin dropped below critical support levels that had held for over a year. It broke the 50-week moving average and shattered the stair-step pattern that guided the entire bull run. Cowen points out that these breaks are textbook bear market signals. Yet, many traders still refuse to accept reality because altcoins never had their moment, and euphoria never arrived. Cowen also highlights a dangerous truth about market cycles. Bear markets usually start after retail floods in, buy the top, and then provide selling pressure for months. But this time, retail never showed up in meaningful numbers. That means there is no exhausted seller base to clear out, which could lead to a slower, grinding decline instead of a fast capitulation event. The lack of euphoria does not save Bitcoin from a bear market. It just changes how that bear market unfolds. Let's watch more clips from Benjamin Cowen's session to gain more insight.
So if you look at Bitcoin and you look at what happened in 2019, Bitcoin dominance topped out the minute the balance sheet of the Fed really started to go up, right? Like that's what happened essentially back then. The balance sheet started to go up, and then Bitcoin dominance topped out. So if you overlay Bitcoin dominance with the balance sheet, you can see that's what happened. And so some people are like, well, why do you keep saying you're bullish on Bitcoin dominance? Because QT just ended. But remember, in 2019, QT ended in August, but the balance sheet still went down for a few weeks because there was still the final batch of treasuries that eventually matured, right? It took a few more weeks for things to turn back around. So I think there does exist a scenario where dominance spikes and then the balance sheet starts to go back up, and then all Bitcoin pairs form lows, and then they go up at some point in 2026 against Bitcoin, but only because Bitcoin's dropping more than the altcoins until that looser monetary policy fully arrives. So when we talk about bear markets, and when the title of the video, like a different type of bear market, I'm looking at ROI after cycle peak and saying, look, guys, what if this is just a normal 4-year cycle and, this is the current bear market, this purple line, and this is what the last one looked like in 2021 or in 2022, and then here's the one in 2018, and then here's the one in 2014. What if it's the same as those? And if it is, it means that the bear market's going to last until October, at approximately October of 2026. But given the fact, and this is dubious speculation. I'm not saying I necessarily believe this is how it has to play out, but I want to put it on your radar so it doesn't come as a surprise later. Given the fact that Bitcoin is topping potentially here on apathy like 2019 before QT ended and when interest rates were being cut, then what if the bear market is not like the midterm year bear markets of the past? Because remember, the cycles will always throw us a curveball. Just like this cycle, the curveball is potentially no alt season, right? So think about it like this. If you're looking at the ROI from the peak, you're comparing the current peak to peaks that had euphoric tops. But why would we do that? Why not compare the bear market to the prior bear market from a non-euphoric top? And that, of course, would not be the 2014, 2018, or 2022 bear markets. It would be this 2019 bear market. And so when you look at that, we just added this chart to the website. If you just look at QT ending bear markets, right? Where QT ends, Bitcoin tops out. If you look at that chart, what if this is the path for the bear market? And so what could happen is you could see Bitcoin sort of slowly go lower into the summer of 2026. But then as looser monetary policy comes in, it's not impossible for it to show renewed strength. Now, obviously, we ended up having the pandemic crash and the recession. So what I'm saying is this, and I know this might be kind of complicated, and the chances that it plays out completely are probably pretty low. But if we think about this for a minute, what if Bitcoin follows this path where it gets some rallies, but it just kind of keeps going lower, and then it just keeps going lower, and everyone's getting upset, and it's not going anywhere, and everyone's like, well, how could it be a bear market when there wasn't a euphoric rally, and there was no alt season, and all this other stuff? The interesting thing is there's also a lot of people that believe the cycle will go on, right? And the 4-year cycle is dead and all this other stuff. What could happen is that you get to the point where you get to like April, May timeframe where Bitcoin keeps going lower, and the people that believe in the super cycle capitulate because they're like, oh crap, okay, it's not a longer cycle, it's normal 4-year cycle. They capitulate. What if they capitulate the lows? Because maybe it's not a normal bear market. Yes, there was the pandemic drop into a recession. And honestly, at the end of every business cycle, we do get a recession, right? Like it's part of the business cycle. But the timing of that could be still much further off than 2026. In fact, if you look at the S&P 500 divided by the money supply, we've looked at this comparison many times before as well. When you look at this and you take the comparison here to 1996, and you look at a bar pattern from 1996 through 2000, right? You go all the way back here to 1996, and you look at what happened back then, and you overlay it to this one, it's almost a carbon copy, including that 20% drop. Now, what's interesting is if you line up that 20% drop here, it could mean the party goes on until sometime in 2027. Both sides have a point, right? Like there's one side of people that are like, how could it be the top? Like there's no euphoria here, right? If you look at all the top indicators, like the terminal price and all this other stuff, like how could that be the top? Well, guess what? That's exactly what happened in 2019, where it didn't go all the way up to the terminal price. And then eventually it went back down to below the realized price in the pandemic crash. Now, I'm not saying it has to follow the pandemic crash, but just to put it on your radar, the realized price right now is almost 60K. And the reason why that's interesting is because when you look at Bitcoin, we also know that in midterm years, it tends to return to the 200-week moving average, which, oh, by the way, is currently at 56K. And remember, that's near the prior all-time highs. So what I'm saying is that there exists a scenario where we're in a different kind of bear market than people think, where it's a bear market from a non-euphoric top. And if that's true, then we need to look at the bear market that started in 2019. And if that's the case, you could have a scenario where Bitcoin does something like this and it kind of drops down to 60 to 70K by the summer, and then that ends up being the low for a little bit, and maybe it starts to go back up again.
When looking ahead, the road appears chaotic and could easily drag on into late 2026. The outlook suggests Bitcoin may grind steadily lower into the summer, potentially probing the 200-week exponential moving average around $56,000. That level lines up closely with the prior all-time high, turning it into a powerful psychological battlefield. The realized price near $60,000 also stands out as a critical zone. These are not arbitrary figures. They represent the intersection of historical memory and maximum discomfort, the place where bear markets often carve their final lows. This outlook does not assume a clean, straight-line collapse. Bitcoin could still launch violent counter-trend rallies, possibly even surging back toward $100,000 before rolling over once more. Those bursts of strength would lure optimism back into the market, only to trap late buyers as the price slowly bleeds lower. The setup echoes 2019, when Bitcoin exploded higher in the spring, peaked, and then spent months sliding while investors waited for the Federal Reserve to ride to the rescue. The true bottom only arrived after the pandemic shock forced emergency liquidity in 2020. The current headwind is that equities keep printing record highs. The S&P 500 remains strong, and as long as that persists, there is little reason for policymakers to rush into aggressive stimulus. Historically, Bitcoin tends to need a crisis to ignite the loose monetary conditions that power major bull runs. Without a sharp stock market crash or a true economic rupture, Bitcoin risks fading quietly into the background while traditional markets dominate attention. There is also a warning embedded here for believers in the so-called supercycle. Many assume this time is different and that Bitcoin can climb indefinitely without enduring a classical bear market. But if price keeps sliding through the spring and summer of 2026, that faith could finally shatter right near the true bottom. That emotional collapse is the signature of real bear markets. They do not just drain capital, they crush belief at exactly the wrong moment. Still, there is light beyond the damage. The current Federal Reserve Chair's term ends in the summer of 2026, and a leadership shift could usher in aggressive rate cuts and fresh stimulus. If that pivot arrives, Bitcoin could establish a bottom earlier than expected, perhaps as soon as May 2026, and begin a new ascent. The journey there, however, will be turbulent. It will strain patience, dismantle popular narratives, and force participants to question everything they thought they understood about cycles. This bear market does not look like the others because it did not start like the others. It began quietly, without euphoria, which makes it harder to see and navigate. The danger is real, but so is the opportunity for those who can survive the slow grind ahead. Now the question is, what if this bear market has already started, and we're all just waiting for a crash that will never come? Thanks for watching, and don't forget to like and subscribe.